Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. The pandemic crushed stocks in virtually every industry, but one that was hit really bad was healthcare facilities. Nursing homes and healthcare facilities experienced high infection rates, lower occupancy, and higher expenses, all of which resulted in lower revenues and earnings. One healthcare real estate investment trust, or REITs for short, that has moved from its pandemic-induced bottom is Sabra Healthcare REIT, Inc., traded on Nasdaq under symbol SBRA. John?
Yeah, thanks, Mo. In fact, Sabra Healthcare is a great example of a niche REIT with a portfolio of high-quality healthcare real estate. Its primary business consists of acquiring, financing, and owning real estate property that is leased to third-party tenants in the healthcare sector. The company's investment portfolio is primarily made up of skilled nursing, transitional care facilities, senior housing communities, and specialty hospital and other facilities. Sabra's investment portfolio currently includes 410 investments. That includes senior housing leased, senior housing managed, behavioral health, skilled nursing, transitional care, and specialty hospitals. It continues to report solid financial results, expand its North American property portfolio, and reward buy and hold investors with a safe and reliable ultra-high yield dividend, which currently stands at 8.2%.
And John, when it comes to areas of stable growth, you can't go wrong with aging North American population.
Exactly. Here's just some quick stats I'm just going to rhyme off. Since 2000, the 85 or older population has grown by 60%. Over the same time frame, there's been a 10% decline in skilled nursing beds. By 2040, roughly 20% of Americans will be age 65 or older, and that's up from just 12.5% or 1 in 8 in 2000. Between 2020 and 2040, the number of Americans age 65 and older will be more than double, reaching 80 million. And the number of American adults aged 85 and older, the group that often needs the most help with personal care, is expected to quadruple by 2040.
Now, let's talk some financials here. How did this company do in the most recent quarter?
Quite well. For the third quarter ended September 30th, Sabra Health announced that total revenue increased approximately 15% year over year to $161.6 million. The company's third quarter net loss actually improved to $15.1 million, or a loss of 7 cents per share, versus the third quarter 2022 net loss of $50 million, or a loss of 22 cents per share. The all-important funds from operation, they improved 17% to 33 cents per share from 28 cents per share. And adjusted funds from operation inched up to 35 cents per share from 34 cents. Now, during the quarter, Sabra generated $80 million of gross proceeds from the sale of 13 skilled nursing and 2 senior housing facilities. And as previously disclosed, Sabra successfully transitioned 11 wholly owned senior housing management portfolios, and performance has so far exceeded expectations.
Now, let's talk about something our viewers like to know. What's happening with dividends here?
Well, not surprisingly, Sabra Health cut its dividend payouts in the opening days of the 2020 health crisis, lowering the quarterly payout to 30 cents per share from 45 cents per share. And it's actually held its payout at that level since then. In November, Sabra's board declared a quarterly cash dividend of 30 cents per share, or $1.20 on an annual basis. Now, that works out to a pretty frothy high-yield dividend of 8.27%, and that's almost triple the current inflation rate of 3.2%.
And finally, let's talk a little bit about SBRA Stock. How is it doing?
Well, management believes that Sabra Health's business has moved on from the pandemic, and by the looks of it, investors do too. As of this recording, Sabra stock is actually up 45% over the last 6 months, 28.5% year to date, and 26.5% year over year. On November 22nd, it hit an intraday high of $14.67 per share, and that's its highest trading level in, I think, more than 2 years. And Wall Street thinks Sabra Health stock will rise still further and close in on its all-time record high of $17.36 per share, with a 12-month high stock price forecast of $16 per share.
All right, John, thank you so much for your insights. Just to recap, Sabra Healthcare REIT, Inc. is a great way for investors to take advantage of fast-growing healthcare facilities industry. It has a strong balance sheet, continues to rebound from its pandemic lows with improved occupancy rates, growing revenues, and expanded portfolio, all of which should help Sabra stock gain further momentum and support its high-yield dividends. That's it for today, and make sure to go to incomeinvestors.com to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more videos soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.